Well, let's talk to the man in charge now, as Joergen Rasmussen joins me live from the Danish capital to talk us through those numbers. Mr. Rasmussen, thank you very much for joining us this morning. You say you are pleased, and yet you did actually miss analysts' estimates.
But if you look at the full year, you can say we certainly deliver on our promises for the full year 2010, and also taking into account what has been happening in Russia, where the duty on beer was increased by 200%. I do believe the performance we have delivered with organic earnings operating profit growth of 8%, if you adjust for the Russian destocking, is pretty strong numbers. And also our market share in Russia was flat for the year, despite we had to lead on the very significant price increases throughout 2010 versus competition.
So during the last quarter, was it really the rise in commodity prices that hit you more than you were expecting?
No, this was basically in line with plan. We said before Q1 we are going to be impacted by increasing input costs, raw material costs in Eastern Europe. We also said our marketing investment will be up in Q4 in Russia in particular. And then because we had the stock loading in 2009 in Q4, year-on-year comparison would be very difficult because we didn't have the stock loading, of course, again in 2010. So I would say numbers came in basically as planned, and I cannot really comment on the consensus being out there in the market.
Now, what about commodity prices, though, going forward? Because they don't show much signs of abating, do they? How does this impact you, and how do you hedge against it?
We will see increasing COGS in Carlsberg for 2011. It's going to be, for the group, an average of mid-single-digit % increase in our COGS, with much bigger impact in Eastern Europe than in the rest of our markets. And that requires pricing in basically all our markets, but the biggest impact will be in Eastern Europe, and the average for the group will be about mid-single-digit in terms of increase.
Now let's look at Russia. You said that your percentage share was flat last year. You're predicting that you could grow the market next year. How do you drive that?
It's back to what we have in Russia. We have very strong brands. We have a very strong, let's say, integrated sales machine, and also the way our supply chain is set up. And if you look at our long-term trend, it has been a kind of increasing trend for many, many years. Last year was flat because of the very extraordinary circumstances on the tax increase. In Q4, our market share is up by close to half a share point versus the same quarter last year. And we are confident with the plans we have in place, with our brands, with the infrastructure, we will stay on the growing trend for our market share in Russia, also looking forward.
You do seem to keep coming up against obstacles in Russia, though, don't you? There's legislation being put in the Russian Duma at the moment about regulation of the beer market, which would include restricting beer sales in places like kiosks and public places in terms of the strength of the beer. Is that going to affect you badly?
In our outlook for 2011, we have made our assumptions on what we think would be a likely outcome. Like in many other markets, and also if you go back in time, a lot in Western Europe, there's always been a discussion about legislation when we talk alcohol. That's part of being in this business. So I would say the outlook, the assumption for 2011 really take into account what we think we know and believe what will be the outcome of legislation for 2011. So it's all in the outlook numbers we have for 2011.
Okay. And just finally, you've cut a lot of your net debt. Are you comfortable with the level that you're at now?
We definitely are. I mean, we are quite low. If you look at the ratio now, we're down to about 2.3, which is certainly, we have deleveraged the company a lot in the last couple of years, and I think have the flexibility we need as a company if something suddenly was out there where we say that could be of interest for us to acquire. So yes, we are very comfortable.
Okay, Mr. Rasmussen, thank you very much for joining us.